Good afternoon to my friends in Europe. Well, we got a market. I keep warning you, there are hiccups that can happen here, folks. And we've got a hiccup this morning. GDP negative 0.3 in the first quarter. China, an absolute mess. And we've got some earnings to worry about tonight that I think are giving some people pause. So, real briefly, we have, reasons to think this might be a little one-offy. Bond market still remains firm. VIX is moving, but it's not getting an absolute explosion. That futures term structure I've been talking about, Justin, if you want to share my screen. Still, we've got a May and June are about, what is that? 70 cents. June and July have expanded to 30. So you're seeing, you're going to see when we get these sell-offs, the curve kind of reflate. But again, none of this smells of panic, but that was a nice little speed bump there for the overall market. No one should be surprised when we get these sell-offs. Last but not least, we're looking at the Russell 2000, which down $4. We'd like this one to lead if the market was going to go higher, and it's leading lower. Usually not a great sign. So a lot of kind of negative news today. I'm really interested to see after this first hour of trading whether this gets bought or whether it gets sold, and you're going to react completely different. If we close the day down 1%-ish, or around there, like we rally, let's say 50 points, you're still going to feel pretty good about this rally. If we close back below the 21-day moving average in SPX, back at, another 100 points lower, then you're feeling pretty bad about this market. So today is going to be a make or break day. Now, to prep you for what, because the market's changed. We're no longer in like pure panic, right? I think we can all agree on that. But we're still in a period of volatility, higher volatility. And that we know what to do with, which is why I'm bringing in our volatility trading expert, Andrew T. Giovinazzi. Now, for those of you unfamiliar with Andrew, and you can stop sharing my screen. For those of you unfamiliar with Andrew, he wrote the program that taught me how to trade. He's employee number 1 at Option Pit. And, he has, traded just about everything over the course of 30 plus years of trading. And today, what he's going to talk to you is about how to interpret VIX based on the levels and how you trade that. I think it's a really important lesson, and you're going to be able to take what he goes through today and tomorrow and really apply it to your trading as soon as you're done with the session. So with that, I'm going to bring on Andrew. Andrew, good to see you.
Thank you for my intro.
You're welcome.
Yes, I'm getting close to my 35th year of trading options.
That's just bananas.
Huh?
That's just bananas. But, my feeling, do you disagree with anything I kind of laid out there at the top of the show?
No, I mean, market's still volatile. I mean, we're not panicking, but VIX is still in the, over 24. We'll discuss that today, by the way.
Yeah.
So basically anything can happen. Yeah. Anything can happen when we're in zone 4. But if you don't know the zones, you wouldn't know. So there we go.
Yes. So
we're gonna discuss the zones today. I actually have an outline. We're organized today.
Yes, we got a beautiful presentation for you guys today on VIX zones, and this is very important. So get your pen and paper out and get ready to take some notes, because Andrew is about to drop about 10 knowledge bombs on you folks. And so what I'm going to do now is I'm going to kick back and I'm going to watch Andrew present. I'm going to enjoy myself, and I'm going to let him take over my domain of this morning prep session. So with that, folks, I hope you have a great rest of your trading day. Take it away, Andrew.
Yeah, so the idea of this here today is I'm going to fill this sheet out, and then it will be kind of a handout for you guys later. Don't know how that's going to be distributed quite yet, but anyway. So things I want to cover today is, why does VIX need a zone? If you're not familiar, I'll just talk briefly what VIX is. Right? Does Apple, the stock price, have a zone? Okay. Talk about Apple volatility, VIX zones, so you can get a little bit of idea why we have them, right? What makes VIX have zones? What are they relative to SPX? And then some characteristics. I'll try to get that all in about 23 minutes. And then we'll have sort of using the zones. Tomorrow is part 2. So if you're feeling like you just got an appetizer today, you get, you're going to get a little more tomorrow. So the first thing you want to do is this. First off, you look at Apple, right? Now, what are most people comfortable doing? Like, so you see Apple, right? And you notice this chart of Apple. Boop. Okay. So you notice this chart of Apple here. Let's make it a little bigger for everybody. And right, okay, here we go. Right, so you have our Apple chart. What do you notice about this? Does this really have what we'll call just like we started at $11 and we went to $260? Okay. It's going up and down. You use technical analysis, maybe where Alicia uses pitchforks, but she's really good at it. Not many people are. But for the most part, you really don't have a range here. You got a low price and a high price. What we would call, the big word is log normally distributed, meaning the prices go up over time. That's stock prices. Now, so this is your Apple, right? So this is how Apple moves. Okay, this is how Apple moves. Now, the difference is, now let's contrast that to, right? And why does VIX need a zone? Okay, you clearly don't have a zone for Apple stock price. You use TA, technical analysis, but for the most part, it's a log normally distributed. Stocks go up, right? They go down, they keep going up, but you really don't have what we'll call a long-term range. So Apple moves in the geeky term is log normal. That's what Black-Scholes, that's what the option model likes for the geeks. Okay, whoop, up. This just means up over time. Now, all right, there we go. We got caps everywhere. Okay, now let's look at how. I'm just going to leave that big print. We'll do the editing later. Now what I want to do is look at Apple volatility over time here. So if I look at the volatility, it looks a lot different though. Okay, the volatility looks a lot different. Oops. All right, you see this? Like, you definitely have a range. Boop, boop. Now we have this is outlier. Just to give you some perspective over the last 10 years, this was COVID. And this is now. So when Mark says the panic is over, volatility is way down here. But you got to say, this is the second biggest shock in 10 years for Apple. Point of reference. So this is the volatility of Apple. Okay. So we look at this just so you have an idea. You're like, what does this have to do with VIX? This is giving you an idea. Like volatility pretty much doesn't go below that point, and it rarely goes above, let's say, about 55 for Apple on a 30-day basis, meaning volatility for the next 30 days. What does the market think Apple's going to do? Very range bound trading, what we call reverting trading. Okay, this is what we got, what we'll call reverting trading. I don't want that one. I don't want that one. I don't want that one. What the heck happened? Oh, there it is. Okay. Okay. So, right. So here you go. So what this gives you is the idea of volatility has a range. And once you have a range, you trade the range. And we're going to shrink this a little bit here. Okay. So we have volatility has a range. Okay. And once you have a range, we can trade the range. Right? Range goes up, range goes down. Okay. Now for VIX, our range is established. VIX is the volatility of the S&P 500. The 30-day implied volatility of the at-the-money option in the SPX. So just to give you an idea here, this actually doesn't exist. There is no exact at-the-money 30-day implied volatility option in SPX. This is a combination of option prices that deliver this number to us. So just like Apple can have a 30-day implied volatility that has a range, VIX is the 30-day implied volatility range for the S&P 500, and it looks like this. So I'm going to grab VIX here. And now we have a long-term, what's going to look like. It's going to look remarkably similar to what we just showed you in Apple. Okay. Now I want you just to see kind of the similarity of these two charts, right? You got the spike here. So again, this is Apple volatility and the VIX. Apple volatility and the VIX. Look at this. Spike, spike, same day. Oh, almost all-time highs except for COVID. Right there, right there. Okay. Now, there are things that can make VIX move a lot more than Apple, so they're not always going to be perfect, but you see the spike days are pretty darn close. So what you have is a range. And when you have a range, you can have quartiles, right? Right. So when I have a range, quartiles, what is that? Just quarters, quarters. You got one quarter, second quarter, third quarter, fourth quarter, like football. We're in the first quarter. We're in the second quarter. We're at halftime. We chill. We're in the third quarter. We're in the fourth quarter, right? So the idea is you can break up VIX into quarters. How much time? And when we talk about our VIX zones, right? How much time do we spend? Shouldn't say we, does the VIX spend in each quarter? I'll say quadrant. There you go. There's another geeky word. Quadrant, quarter. however you want, whatever word you want to use. Now, VIX zones, what are, give me, basically break down the quarters. So we've got, since we have quarters, we have 4 zones: zone 1, zone 2, zone 3, and zone 4. Now, right now, it sounds like zone 4, we need like zone A, B, C, D. But if you look historically at this, right, and there's our zone 4 about right there. If I drew a straight line across here, I think I can actually make a line here for VIX. We'll do that. And what I do, I'm going to draw 24 volatility. You guys see where that line is? You see 24 volatility? It definitely can get up above there for a while. And then it spends a lot of time below that. So you can see in a 10-year period, gives you an idea of what's going on now relative to history. So 2022, we had that inflation. That was probably one of the more volatile periods I can remember. Okay, post-COVID, volatile. And then 10 years before, you only had a couple times where we visited above 24 at all. Again, giving you an idea of, while you think there should be other levels above, historically, 24 is right around the top of the range. So zone 4 is VIX 24 and above. Okay, zone 1, and you're going to see why this is going to be in a minute. Zone 1 is right around, I think 899 is the low, I believe, but we'll just call it around 8. Just touching up to 1299. So anything in the 12 handle, and I'll give you a reason why the 12 handle is important. The 12 handle is 12 is the mode for VIX. Again, another geeky statistical term. Mode is the number it spends the most amount of time in. So VIX 1225, VIX 1255, VIX 1235 spends a lot of time in the 12 handle, and I'll show you the reason why that is. But it's very important, right? And there's a reason for that. But that's our zone 1. That's the bottom quartile. VIX breaks evenly, spends half the time below 18 and half the time above 18. So that's going to generate zone 2, 13 to 17.99. Okay, so that's going to give us zone 2. It's the second half, right? So that's going to complete basically that lower end, right? It's going to complete that lower end down here, that lower half of the time. And then zone 3, we're just going to fill in between that. That's 18 and above, 18 to 23.99. Now, what this gives you is, now if you want to think about this now, when you're in zone 1, where are you going? 75% of the time, we're higher than zone 1 historically. When you're in zone 4, 75% of the time, we are lower than 24. So again, if you aggressively, what we'll call sell volatility in zone 1, knowing that 3/4 of the time we could be way above that, that could work for a little while, right? Because you got room in zone 1. You can go from the top of the zone to the bottom of the zone. But you know that over time, it's easy for you to pop out of that zone because 3/4 of the time we're going to be above it. So again, keeping in mind that we are here, we got into, like Mark says, we're not in that panic mode. We're not in the top of the zone. but we're now slowly kind of moving down the zone for VIX. Now, one thing to note. One thing to note is you notice how we're bouncing right around what? Right around zone 4. It's important that when you get to a zone, I'm going to put a couple of tricks here for you about zone characteristics, buying and selling options, is that when you move down zone to the bottom, you usually break through. So right now we're in the 40s, 50s. A couple of weeks ago, we're moving down. We traded to 23 and change. So we got into zone 3 for a brief moment, but we weren't able to hold it. Again, so I'm going to say here, this is kind of a fun one, around the inflection points. Around the inflection points, you get a lot of what we'll call action. Okay. Now, the reason that is because every zone is a market sentiment area. Now, I'll ask you a question. Do you think we're out of this trade hysteria, whatever thing that gripped the market at the beginning of the month? Do you think we're done with that? Do you think we're done? Do you get a feeling that you're done with this? We're done. Like it's over. Okay. So I wish, no. So what that means is because you feel that sentiment, that means we're going to dance around this 24 handle till there's more resolution in that area. Does everybody get that? In my view, we're going to dance around this 24 number until there's more resolution. The market has to see, right? You have to see resolution to move to a new sentiment area, to move to a new zone. Okay. Okay. It is becoming more dull. So what this gives you is areas to trade around. So VIX gets down to 24. You set up trades around the inflection point of 24. Another thing is once you get into what I would call a down zone mode, okay, we're going to give you some terminology here that we'll use tomorrow. Down zone and up zone. So the terminology I use here is, what was the last zone we were in? So right now we are down zone in 4. We are now up zone in 4 because we just traded in zone 3 yesterday. Which means that for me, I would lean a little long VIX in a new trade today if I'm putting on a new trade today. Because we have now, right? It's from, so when I say up or down zone, how is VIX moving from the last zone? And I just invented this, not today, but as a way for me to realize how volatility is actually moving. So we were down zone in 4. You want down zone in those once we peaked. But now that we have hit zone 3, we're now going back up again. We are now starting a new vol regime. So again, trading desk will look at that. Pro will look at that. Okay, there's new things. Would you be preferring straddles while in zone 4? So what I'd say in general, Agent 407, zone 4 is very high realized volatility. And that's the last thing I want to cover here today before tomorrow, where we kind of put all this together. And zone 1 is very low realized volatility. Realized volatility is just how much, right? How much the S&P 500 is moving. So I'm going to give you a chart of that here in a minute. And that's what we're going to close with. Tomorrow, what we're going to do is try to put these things together. Now that you have kind of a little cheat sheet on how to kind of look for trades as we move up zone, down zone, and realize volatility, how SPY is moving. Like, when does it make a good trade? So Agent 4 said, like, when does it make a good strangle? So I'm going to give you a little thing here in SPX to think about. Realize volatility, just how much the market's actually moving. And we're going to do that here. All right, so here's our implied volatility, right? There's our range. COVID spike, current spike, second highest spike since what? Since the Eurozone was going to collapse. So to give you an idea how big a deal that volatility is, besides us all going to die from COVID, and then we realize we're actually not going to die. Okay, that's because look at how fast the vol came down once everybody realized we're not going to die. Okay, we're still like, we got to what, 20 vol pretty quick. 70 to 20 very fast. 2 weeks, 2.5 weeks, something like that. We still haven't given it up yet because we're trading at a 2640. Okay, here, this is the Eurozone gonna collapse. Yeah, that's just giving you an idea how big a deal this is. Now, realized volatility is the range. Let's see here, right? So here's your realized vol can get down to 6%. So this line right here is 12. Do you guys see here? 12% realized vol is right around here. So realized volatility, 12 volatility in SPX is roughly the halfway point in how SPX actually moves. Okay. SPX actual movement day to day, close to close, is that halfway point is around a 12 vol. Kind of crazy. Okay. It's not 20 or 22 or 40. It's a lot lower than you think. That's why it's an important number. It's a gravitational pull number. But we're going to discuss that tomorrow. But I wanted you guys to see what a realized volatility chart looks like, because all this is just math. How much you expect something to move. Right now, 30-day volatility in SPX is well over 40. Okay, and we're getting really big moves even today. Today is like 2% is 30. When we were down 2% was a 36 volatility day. So here is our, so this is 30-day realized volatility in SPX. So this is kind of, you can think of it as kind of like this is like the technical analysis, right? For volatility. It's not really technical analysis. These are just charts with ranges. You want to see where their lows and highs are and areas of what I would call inflection. You want the areas around the zone changes are changes in sentiment because they're different market feels. Market is moving at different speeds. That's why you want to know where those inflection points are. And look at, we're already recovering, down 2%, only down 1.3% now. Can't keep this market down. All right. So this class is over. You got to be back tomorrow at 10 o'clock, and we're going to try to use these things. Well, not going to try. We are going to use these things as tools in your daily trading. Come back tomorrow. This will be a PDF. They'll make it look nice, and then we'll give you a little more action tomorrow. Hopefully this was helpful. Give you the idea of where we are in the market, where volatility is. This session is recorded. We might even send it out to you, Jimbo. All right. Tomorrow, we'll put this in practice. Be here, be square. I am out.